Hello traders everywhere. Welcome to this edition of Trade School, and the market we're looking at today is right here. Gold trading below $1,400. Unbelievable. We'll be covering all the aspects of what made gold drop so precipitously. Let's go take a look at our portfolio and analyze gold in more detail. Okay, we're at our portfolio, and the market we're going to be looking at is gold, spot gold as a matter of fact. It trades 6 days a week, 24 hours a day. It's a pretty amazing market and one you should be familiar with. It offers great opportunities both on the long side and short side of the market. Moving to the right side of our portfolio, we can see all of our trade triangles are negative. We are going to see a chart which we just click on this point here, and here we can see gold in the last 72 hours has just plummeted three super down days from 1560 down below $1,400, a loss of $150 in 3 days. That's a 10% loss in 3 days. What caused this? Well, let's put in our trade triangles, but let's go back just a bit further to 6 months and put our monthly trade triangles in, and there you can see our monthly trade triangle kicked in $1,672. That's $270 ago. That was a major trend indicator for us saying gold was going down. Now what we do is use our weekly for timing, and you can see at 1653 the trend turned down on our weekly, and the last signal we had was 1554. That's $150 ago. That's $15,000 a contract. Pretty amazing. So what caused this? Well, could be Cyprus, could be a big liquidation in the ETF GLD. We're going to show you all the trades from the beginning of the year using our trade triangle. So all we have to do is click here, put our trade triangles in. You can see there's our last signal there at 1653 on the 11th of February. And you can see the trend continue down, and then we put our dailies in for short-term timing, and you can see our last signal was there at 1554.23. We'll show you all the signals and how you should trade the trade triangles using our technology. It's very easy and very simple, and the results, which I'm going to show you, have been nothing short of spectacular. So stay tuned. Before I show you the trading rules and the results for trading gold, let's take a look at the big picture for that market. I'm going to be going all the way back to July of 2005, right the way back here. And I'm going to use a tool called a Fibonacci tool, which is easy to use on MarketClub. Just click here, and you see a little yellow box. This is named after Fibonacci, who was a 14th century mathematician. And you can use this very simple tool. And believe me, I don't know how it works, but it just works for a lot of markets, including stocks, futures, and so forth. But it's retracement level. When a market goes up, it normally has a retracement, and the retracement level is 38.2%. We've obviously hit that. 50% is $1,296, and 61.8% is $1,152. Now, I think we could certainly see the 1,300 level hit in the next week or so. It could be even longer than that, but the reality is the market's in a very strong negative bear trend, but these are the big Fibonacci numbers that you should be looking at. So let's go and take a look at the trading rules. As promised, here are the trade triangle rules for gold. You want to use the weekly trade triangle for entry and trend. Exit on a daily trade triangle of the opposite color. Only re-enter a trade when both the daily and weekly colors match up. There you have it. That's the rules for trading gold. As promised, here are the results using our trade triangle signals. You can see every year it's been positive since we've been tracking it since 2008. And the returns are based on $5,000 margin for one contract of gold. Thank you for watching this edition of Trade School from MarketClub.